What's up? Hello, hello, hello. The Great Unwinding has begun. That's what I am calling this beginning of the market sell off, which will ultimately unwind the entire Trump rally that we have seen since the election, which has been built on pure expectation, and nothing has happened. And it's not, by the way, it's not just that nothing has happened. There have been things that have happened. Number one, the economy has slowed down precipitously, all right? Number one. And number two, as you have been informed by me alone, is the fact that Trump, when he got elected, he started filling up all his advisory posts and his economic team with fiscal hawks and deficit hawks. And I've been out there very, very regularly telling you that this is not a good sign. You know, the guy talked a certain way during the campaign, big infrastructure spending, tax cuts, and then he brings on all these these debt fear mongers and these fiscal hawks and deficit hawks. These are the guys who are advising him in fashioning policy. And it's not just my perception. We saw the budget that they put out last week, the proposed budget, with cuts to domestic spending programs that more than offset the 54 billion expected increase in military spending. So the budget was, at best, it was neutral in an economy that is grinding to a halt, where tax revenues are going parabolic through the roof. That is the opposite of the automatic stabilizer. You know, the automatic stabilizers, things like Social Security and Medicare and Medicaid and unemployment insurance and disability benefits, all those things expand when the economy goes into recession because people lose their jobs and stuff like that. So it acts as a safety net. It holds, the economy at some level. When taxes are expanding far faster than the growth in income and the growth in the economy, exactly what we have now. Tax deposits are growing over 9% per year, annually, year over year. What, 2.5% growth in income, economy growing at 0.9. This is the automatic braking mechanism, not the automatic stabilizer. Anyway, so, stuff's been going on. I told you that this rally was bogus. I mean, I believed in Trump. I believed what he said, but then it's like every time we have an election, you get these people, and the same thing happened with Obama, and they make all these promises, and then they bring the worst possible people. I was even looking forward to a rapprochement with Russia, and he brings in, the most virulent, the one guy he had, Mike Flynn. He threw him under the bus, and then he brings in these anti-Russia ideologues, James Mattis. You got this new woman, I forget her name now, who's running the Russia desk in the White House. She is a super hardline. So I mean, it was all talk. All right. So what's going to happen? Now, it's a very interesting scenario. And by the way, let me just say, this could all change. I mean, Trump, maybe deep down intrinsically, if the economy goes into recession, maybe the sort of unadvised Trump, Trump not influenced by his team there, would say, hey, we need a big stimulus and we really need to make it happen. And that means spending and that means tax cuts. So, but again, I know the impact of policy, so I'll be following it. But right now, it doesn't look very good. I think the whole entire Trump rally from November 8th is going to be reversed. And who knows? Maybe more than that. We have to see the policy response. If it goes into recession and his team says, hey, it's all because of the deficit, or it's because of the debt, and we got to cut the debt, then forget it. I mean, we're looking at a Europe-style scenario where you have ongoing recession. I mean, you don't know. You don't know at this point. But right now, I think reality is starting to creep in. And by the way, this whole thing could play out in a number of different ways. We're going down, okay? But it could go down fast. And I think that would happen if we see a failure of this. Yesterday, what triggered this anyway? It was a conversation that was brought up. It came out of Congress. I don't know, maybe Ryan hinted at it or suggested that if this healthcare replacement bill doesn't pass, it raises doubts about the tax cuts, and that sent the market down. So I mean, if this bill doesn't pass, and now you have this kind of meme going on, like, hey, this bill's got to pass, otherwise the tax cuts might be in jeopardy, then we see some really hard selling. If the bill passes, you might get a little pop back up, all right, but it does not, I think, take away from the bigger picture, which is the bill itself, all right, is going to be, I think, fiscal drag. It cuts a lot of subsidy. A lot of people get thrown off. I don't want to get too much into the new healthcare bill. But then you still have the ongoing problems with the economy. And, we won't get to see the first quarter GDP numbers until late April. Now, I want to also mention what's going on with the banks. And we see the bank stocks getting hit. And I've been telling you about the collapse in credit growth. But not only that, those of you who get my MMT Trader report, there's other things in there that I have been talking about, specifically having to do with bank profits related to trading and their positions. Okay, very, very important. We're going to get bank earnings beginning of April. All right, so I mean, it could play out fast, it could play out slow, but it's going down. The other thing is, what about the dollar? Okay, very, very interesting scenario, because you see now people rushing into treasuries and yields coming down. So and you know how they all believe, they all think wrongly that higher rates are bullish for the dollar, even though we see, I called it, right? But now that they think the Fed is not going to be able to raise, right, this could put a lot of pressure on the dollar, especially if the stock market is going down. And if the dollar falls in an accelerated way, what does that do? It raises import prices, raises inflation. You start to see gold go up. You start to see other commodity. Very interesting scenario here, and different than anything we have seen in recent years. It's almost like a 1970s kind of situation. So got to really be on the ball with what's happening with regard to inflation expectations, what the Fed is going to do, how that impacts the dollar, how a weaker dollar will manifest in higher import prices, higher inflation levels. It's going to be very interesting to see how the Fed handles that. But, there's going to be a lot to make money here. There's going to be a lot of opportunity to make money here. I'm loving the sell-off. I think I'm loving this sell-off more than I loved the rally last year when all the zombies were selling every single dip. They sold into it. They sold the bottom. I'm loving this even better because the zombies turned into super bulls. I had some of you people on this channel tell me, Mike, it's different this time. It's not going to come down. It's not. I was just laughing. I'm right every time. I was laughing at you people. It's going to come down. You're all going to end up being bears. I'm going to be buying again. I take your money so easy. See you guys. Bye.